Alright, YouTube, what's up, guys? My name is Alexander Soderkvist, and it's been a while since I made a video. I think it's been like a month, or maybe more than a month. It's been kind of crazy. Um, I've been really busy, and yeah, I've honestly I haven't really been too into the markets. I made some changes to my portfolio since my last video. Um, as you could tell, with like Eris Mining is no longer here. Um, yeah, I had a gain at one point of about 71,000 or so on Eris Mining. Um, but if you guys are gold investors, you probably saw what happened a couple weeks ago. I think it was like very early February. Um, yeah, so my portfolio tanked like 21,000 in a day. No, actually, it was more. I lost like 23,000 the day that happened, which is fine. I mean, I never panicked or anything. I bought more Eris Mining on the dip, and then it recovered a little, and like my Eris Mining went up like a further like um, about 5-6,000. So in total, like from that happening, I lost about $15,000, but not of my actual own money. That was primarily just of gains that I previously had, which is okay. Um, but since then, I didn't really sell Eris Mining because of that. I sold Eris Mining because I found other stocks, another mining company that reminds me greatly of it that I think is really cheap, that I think is kind of the same play, if not even maybe a little better in the short run. But yeah, so that video, I'm going to talk about that. Um, but yeah, I thought I would give you guys an update because my portfolio looks really different. And as you can see here, like a lot of the money I had previously invested is not, like I still have like 14, 15,000 I can use to invest, something like that. Um, so yeah, but anyway, so my portfolio is really different. Like I own Fairfax now. I've held it for a little, and I bought back in to United Health Group. I kind of sold my whole portfolio because basically all my stocks were up. So I wanted to lock in all those gains before I started, doing other stuff. But yeah, so anyway, but I'll talk about the new stocks that I hold and the stocks I want to buy. Um, in the future, but today is really going to be the mining stock that I'm really into right now, that I believe in a lot. And I don't think I said it, but I was up about 71,000 on Eris Mining. Some of those gains obviously disappeared, but I still sold Eris Mining for like $55,000 worth of profit, which I'll show a screenshot. Um, But yeah, anyway, I do want to say though, I am not a financial advisor. In no way am I making, suggestions or financial advice or anything like that. It is your money. You should do research on the stocks you want to buy, all that kind of stuff. So yeah, in no way am I suggesting that you should buy um, a stock or sell a stock or whatever. The decisions that I made were kind of my decisions. And maybe they were bad, maybe they were good. I mean, my decision seemed kind of like neutral because I could have made a bit more money, like maybe $10,000. But gold could have went down further anyway. But yeah, I also did not really just sell um, Eris Mining because I was worried that gold was finished or something. It had really nothing to do with that. I sold Eris Mining because the other stock that I'm interested in is also a mining company, and so I want to buy like about $20,000 worth of it. Um, and to have the about 120,000 or whatever I had in Eris Mining, and then have 20,000 in um, WAF, that's a lot of my money, like just in mining stocks. And as we saw, like I got destroyed in February when gold crashed. So that was a bit of a lesson. Expensive, I lost about $15,000, but that's okay. Um, but yeah, anyway, so let's talk about West African resources because that's the stock that I'm. Alright, so let's start at the numbers of West African resources because this is really where we see strength in this company. Um, so yeah, so the financial health, we can start at. They have a debt level of 412 million Australian dollars, which I'll just say dollars, but this is in Australian dollars. This is an Australian company. They have $279 million of cash. They have $1.46 billion worth of equity, and they have 806. Well, equity is really like um, business value, I guess, after um, all the liabilities are deducted from the assets. Um, so yeah, so that's very strong. Sometimes we see negative equity, which could be like a red flag for a business like this, but that is not the case. They have positive equity and it's strong. Their market cap is also 4.1 billion, which is important um, to recognize in a company like this. But yeah, so they have total assets of 2.27 billion. Again, Australian dollars. This to me, I don't really look at this as much. Um, but we could see here how quickly the equity has been growing in this company. Keep in mind, they post basically like, I forget the way you, um, what you call it, but usually businesses report quarterly, if they're American or Canadian. Um, but this business it's like twice a year. So yeah, so I don't remember what that would be called, but that's okay. It doesn't really matter. So we can see in past performance here, they have very strong margins. They have $857 million worth of revenue, which again, at $4.1 billion worth of market cap, that is, you know, not. It's like valued properly, in my opinion, right now, considering the revenue. Um, but their earnings and cash flow are extremely strong. So we can see here they have $294 million worth of cash from operations, right? They have negative free cash flow, which is okay. I mean, it's understandable considering that they're still kind of in the middle of a ramp up. Um, you know, them having such strong cash from operations is the real green flag here, and having good earnings with a 38% profit margin, basically, just rounded up. Um, but yeah, so this is a very strong company. We can see here that the return on assets are very strong, return on capital employed pretty strong. It's still up there, but sometimes you see better than that. But return on equity is very good. Um, but yeah, if you look here at future health, which we're gonna actually do the numbers ourselves here because that's not too hard with mining companies. Um, Analysts are forecasting that West African Resources will go to a $3.2 billion revenue and $1.3 billion earnings, with cash flow really about the same, 1.2, 1.4 billion. Now, that's a humongous jump. While revenue, I would not be so certain that it will hit that, but earnings, I could be quite certain. So, you know, um, yeah, anyway, I guess we're jumping the gun here a little bit. We're gonna do the numbers ourselves. Um, but yeah, I do see this happening for this company, which if this does happen at a $4.1 billion market cap, that gives them a P ratio of 4, right, in the future. Um, 12 months away, um, which is very cheap. You can see all of these companies trading at, 16, even 16 is relatively low, but would be understandable for a company like this, considering where they operate their mines, which is in Burkina Faso, which is a risky jurisdiction for these mining companies, considering that the um, person there, the leader, I forget his name. I think he's the president, but like he ran the coup and he kind of did like a military takeover of like a coup basically, and took over the country. But he also demands mandatory like state ownership of these companies, which sometimes that can be a risk. Um, and he also wants like royalties from these mining companies, which can also be risky. But yeah, anyway, we're jumping the gun a little bit, but I could understand them trading at a P ratio about 16 or 14, something like that. but 4 is way too low. So yeah, let's talk about the actual company itself and not just the numbers. All right, so here we can see on the front of the website, it says West Africa's growing mid-tier gold producer, which they are really a mid-tier producer. They are not a massive company by any means in the gold industry. They're not small, but they're not big. They're not massive. They're very underlooked, I think, by the stock market. But yeah, they do only trade on the Australian market and on pink sheets, which I think is maybe part of the reason that they're underlooked. Um, a lot of these mining companies are Canadian companies or American. So yeah, so let's talk about the actual mines themselves. So they have San Prado, which I don't think I pronounced that very well. But they own 90% of this mine, and the government of Burkina Faso owns a 10% interest, free carried. Um, they first gold pour was first in March 2020, which was actually COVID. Um, 6 months ahead of schedule and $20 million under budget. So this is where we can see strength, right? A lot of mining companies overspend, right? Like we saw that with Ascot Resources, which that went horribly wrong. But no shade on them, but that's okay. But for them to actually deliver a project under budget, right? They underspent. They spent less than they originally planned, and 6 months ahead of schedule. That is very solid moves by the management. So that is a good thing. They have a resource of 4.9 million ounces of gold and reserves of 1.5 million ounces of gold, which is a lot. The gold is 2.4 and 1.83. That is not massive. This is not extremely high quality gold. But, sometimes that doesn't matter, especially in a climate we're in right now where gold is just flying. Um, but yeah, so let's look at the actual numbers of these of this mine. So 2024 production was 206,622 ounces at an all-in sustaining cost of 1,200 per ounce, right? And gold right now is, we'll call it 5,000. Although I guess it will take a while for them to realize these prices, but we'll just say 5,000 because it's a lot easier math-wise. That gives them a margin of like $3,800, right? They pay the expenses, that's 1,200. That gives them like a third of their revenues and expenses, and that gives them like 3/4 in profit, right? That is extremely solid. Um, but yeah, so 2025 production was increased a little, right? Um, yeah, because they were kind of expecting to do 210,000 ounces at the top of their guidance. To the low point of 190,000 at an all-in sustaining cost of site sustaining cost. I will assume that that is all-in sustaining cost of 1350. That's still extremely low, and they have a lot of margin, so that's not really a risk. So yeah, so um, I do believe they did release guidance. Yeah, I guess it will be here, but we'll talk about that after. We'll go talk about Kiaka, which again, I may not have pronounced that right. I'm sorry, but Kiaka, 85% owned by West African Resources, with the Burkina Faso government owning 15%, which again, it's a little risky, but it's okay. The project has a resource of 7.9 million gold ounces um, and reserves of 0.9 grade per ton for 4.8. So this is a very big project. This is not a little project. This is big. I don't know what that was, but anyway, this is a big project. But yeah, very low grade, 0.9, and here's 0.9 as well. Kiaka will be a long life, low cost gold project averaging 234,000 ounces of gold per year for 20 years from 2025, right? The team expects to ramp the project up to nameplate throughput during third quarter 2025, right? With Kiyaka, with the Kiyaka build complete and production ramp up underway, the company has realized its strategy of having two long-life, unhedged, low-cost gold production centers in operation 2025. First gold at Kiyaka is a major milestone for West African resources and a key step towards the company's target of being a 500,000 ounce per year gold producer by 2030, right? Um, but yeah, here are some pictures, I guess. This guy looks really happy. This guy looks even happier. Just look how happy they look. But yeah, so once again, man, this is a very high quality project. Maybe not in gold, um, like purity, I guess, but in just straight up bulk, it's very, very good. So let's talk about Toyoga. Toyega, I definitely did not pronounce that right. Um, the gold deposit, Toyoge, my gosh, just don't pronounce that well at all. Um, has a mineral resource estimate of 21.7 million tons, which is not the same as ounces, at 1.8 grade per ton, which is actually a higher grade than some of the other projects, for 1.27 million ounces of gold, and a ore reserve of 9.5 million tons for 569,000 ounces of gold. So that's like 1.9, I guess, in total, like with some ghetto math. Um, but yeah, it will commence production in the second half of 2025, right? Which now we're in 2026, so this has already started producing. Same thing with Kiyaka. So this is free mines, basically. Well, this is more of a deposit that's going towards one of these mines, but this is still very strong. Um, yeah, but I don't know if it's gonna say here. Um, but yeah, anyway. So let's actually just, because I guess the quality of the mines don't matter as much as, the guidance, I guess, for 2026. But 10-year output, yeah, so between 2026 and 2031, the group is expected to average more than 480,000 ounces per year after Kiyaka delivers its first full year production, peaking at 494,000 in 2030. This doesn't matter as much for me at least, because I'm not in here for forever, Um, but um, yeah, so it doesn't seem to give a. There was a place that gave the real number. I'm gonna assume it's in its presentation. Um, I'm gonna assume it's in the presentation. But I'm also gonna find the video I watched by the management presenting. I think it was here. They were presenting this exactly. Um, which it was a very good presentation. They were talking about paying down the debt um, further and then eventually paying a dividend or doing buybacks, or maybe both. But um, yeah, they also spoke about a realized price for profit being about 2,000 should gold remain at 5,000, which I think will be higher than that, assuming this like ultra bullish um, well, maybe not, but something around there. But yeah, so production target to average, which I guess this is not per se um, a guidance, but this is more like, this is still what they're going to be producing. So 500,000 ounces, it's going to be about 477,000. Um, so yeah, so let's get the calculator out. Oh, that wasn't for you. There we go. Alright, so here is our calculator. Um, so yeah, so let's do 477,000, and we can times that by, um, we could do 5,000, but, um, yeah, we'll do this in a couple different gold prices just to show, um, what the revenues could look like. But yeah, so this is a $2.38 billion revenue at 5,000. Should the price not go any higher, and should they not beat, which again, they've beat their targets like every year for the past like 5 years. It's been a while. But yeah, so at 477,000 ounces a year, at a gold price of $5,000 equal 2.7 billion, 2.8. Now this is also, I guess we could put this in USD, which would be a lot higher for Australian dollars and Canadian dollars. But still, just this number alone is very bullish, right? And then we will get the profit. So let's go with the board. What they said, $2,000 of realized profit, which I guess could have just used my calculator down here, but forgot about that. Okay, so let's do 477,000 times 2,000. Yeah, so we're looking at a $954 million of revenue, which, again, that's still very high. That still gives them earnings of about, like, well, P ratio about 4. So, um, but yeah, now if they do more than that, obviously this will be higher. And if gold goes higher, which right now we've seen it kind of stabilize around 5,000, which is bullish, for, in my opinion at least. We saw these huge gains. That was crazy. But I'm actually happier to see it stabilize rather than go up and up and up. Um, yeah, just so these mining companies could start to realize these massive numbers, and we can still see the Eris mining. And this is another video I'm gonna make. But yeah, so 477,000. But see, here it says 2026 to 2031, 511,000. So maybe this is a um, low target, but 511,000 will do that as well at 511,000 a year ounces. At a gold price of 5,000 equal, so let's do that once again. 511,000 times 5,000. Yeah. Yeah, so now we're looking at 2.55 billion, which seems very low, considering that that's quite a lot higher than here. But yeah. But still, overall, this company is at least, in my opinion, I have about 4,000 shares right now. You may not see it because, again, like, um, Blossom tracks a different bank of mine, Wealthsimple. But I'm holding that with IBKR, so maybe I'll show a picture. But yeah, so I have like 14,000 in here. Um, but yeah, I do believe in this company. Um, yeah, see, so this gives them 1.02 billion of profit slash cash flow. Now, these are not exact numbers. Obviously, gold can go down or gold can go up, or maybe they don't do as much, they do less, but either which way, like, they are just so cheap. Like, if let's just assume ultra bear case that gold goes back to $3,000 a share, right? At, well, I guess we don't need to copy this, but we'll do at a gold price of 3,000, right? So let's just assume in this world gold absolutely goes right back to $3,000, right? Equal. And the market may not agree with me on this, but still, let's just test this out. So 4,000, 477,000 times 3,000. It's still 1.43 billion, so it's still basically double the revenue now. 1.43 billion. Now, overall, the profit and stuff may not look as nice, but we will still do it. So 477,000 times, no, would not be that. We'll do about 1,000. Yeah, so it's still 400. So that gives them a P ratio about 10 right now. Even then, actually, it's more like 9. But yeah, well, that was an accident. These are not perfect numbers, but I mean, you can still understand. Now this, let's do 511,000 ounces, 511,000 times 3,000 equal 1.53 billion. And we will do profit, which would be 511,000 times 1,000. Is that right? Yeah, that's about rough. That's roughly right. So 511 million. Once again, that gives them P ratio of like 8, maybe. My math is kind of ghetto, but you still, you know. But yeah, so either which way, I still find this incredibly bullish. Obviously, the revenue is a lot higher at a higher gold price. If gold went to like 6,000, 7,000, we haven't calculated for that, but the analysts are roughly right with, no, actually, is this revenue in Australian dollars? Yes, it is. So I think that what they're doing is taking it from USD, because I mean gold would be sold USD, I would assume, and then put into Australian dollars. So yeah, so let's take 2.38, 1.38. Is that right? I don't think that's right. No, 2.38 billion USD to Aussie dollars. Yeah, so see, that's exactly what they did, is just take it from USD into Australian dollars, and yeah, so 3.22. Yeah, I got a little higher here, but that's okay. And this is actually at the 477, so should they do 511, I mean, this goes actually a lot higher than that. So see, we can take 2.55 billion, 2.55 billion. Yeah, see, this is almost 4 billion. Same thing with the profit and earnings and stuff. But yeah, so I do believe in this company. I think that the management delivering under budget and overall just delivering these projects faster than expected, that shows strength. And in the stock price itself, we are seeing a lot of volume. Like, this is not a little stock. This has a lot of volume. So see, 3.6 million today, but it has an average of 9 million a day almost of shares traded. It's a lot. And right now it has a P ratio of 12, which is pretty cheap. But I'm gonna go and try to find the videos that I watched of the management doing the presentations for this company. It's the same stuff we kind of went on and saw, but yeah. So I guess I'll give my opinion on that as they do it, but yeah, so I'll be back. Alright, so here is the video. I actually found it very quick.
Make it a habit, 7 minutes of Tai Chi every morning all the way for 1 month. This Monday we will Our first speaker is Richard Hyde from West African Resources. He's a geologist with 30 years experience. He founded West African in 2006, has
Okay,
overseen significant
let's just skip
discoveries.
this and try to find the overall um, things I want to chip in on. But yeah, alright, so here I found the part of the video I wanted to kind of talk about. So 4 years of meeting or beating guidance, which is strong, and yeah,
Environmental and
so
social programs are aligned with international standards. We've got very strong cash flow. So I'm not a mathematician, but we'll be on track for nearly 500,000 ounces next year. You know, at the current gold price, we'll be close to $2,000 an ounce US margin. So
yeah, so as he just said, $2,000 worth of margin realized. So that gives them very strong. That gives them, about $1 billion a year of cash flow. Should gold stay at this price? So, to me, this is similar to what I did with Eris Mining when the market was not valuing them properly. I bought in and was able to profit pretty nicely. I basically more than doubled my money with that, but yeah, so I see this being very similar. I already own about 4,000 shares. I plan to personally double that to about 8,000 ideally, which is like about $25,000 Canadian, something like that. But yeah, so I would love to hear your opinion about this company. If you believe in it, you know, if you like it, if you've ever even heard of this company. Um, a lot of the videos, there are not a ton of videos on YouTube about this business, and there are not a ton of people covering this business, and a lot of even the YouTube channel that do cover them, they don't get a ton of views. Like that one had 1,000, or actually had less than that, but yeah. So I would love to hear your opinion about this company. But yeah, so I hope you guys are all having a nice day, and I will catch you in the next video.